Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today we're going to talk about IPOs, or as we call them in Australia, floats. And with me, I've Simon Shields from Monash and Rhett Kessler from Pengana. Welcome, gentlemen. Right. Simon, I'll start with you. IPOs, aren't they dangerous? Shouldn't we avoid them? We don't really know the business models.
Look, you can avoid most of the stocks on the share market if you want, but there are opportunities in IPOs. So I don't think they're just an avoid. There are things we don't know. We don't know necessarily why they're coming to market. We need to do some work to discover that out, particularly if private equity is involved. That is a big red flag. But just because a stock's coming to market, sometimes there are good reasons it's coming to market too.
But sometimes we actually don't know the business model that well. It might take us into a new sector.
That's right, dangerous. So you've got to do the work.
Rhett, do you like participating in IPOs? We see a lot of them.
Yeah, I like participating in the process of the IPO because there's never a better time to find out more about the companies. You've got management on the roadshow, you've got very thick, detailed industry reports, and it's a great time to get your bearings in an industry. Because it's got limited visibility in terms of history, it might not be the best entry point. But sometimes as well is they need to get rid of them, they need the money, so they create a great entry opportunity. But every case is different and you need to apply your mind.
Okay, we've had some very good IPOs, some terrific ones. Link, Reliance more recently, but we've had some bad ones. Obviously McGrath, which was a headline act. What are you got to look out for? What are the red flags?
I think some of the red flags is always the motivation for the sales. So if a company's exiting or a private equity's exiting, there's a lot of dressing up that happens. And I guess our speciality is knowing the things to look out for in that case. Yeah, that's probably about what I'd say.
Simon, talking about dressing up, you're a pretty snappy dresser. Now we've got some IPOs that been around recently. Shaver Shop's been one, Kogan, another well-known name. Do you like any of those?
I think if retailers are coming out of private equity, as we saw with Dick Smith, you've got to be quite careful because things can happen with the inventory and some other costs around that. Also, they tend to be a bit more sexy because retail investors will know the brands. But there are ones, Kogan, for example, I think is fine. It's been around for a while. It's been having very strong year-on-year growth. Its web traffic's been going up, and they're coming onto the market for the right reasons. They need to raise the capital to expand the private label business, for example.
All right, and there's even one more recently, Gavera, the online music group that didn't even get to bat up, didn't even get to the plate.
Well, that's a tough one because that was a business without any revenue and huge losses. That was one that I wasn't even planning to do any work on, I've got to admit.
Rhett, they approved ASIC approved the prospectus and then the ASX came over the top and said, we're not going ahead. What do you think about that? Should the market decide on these situations? Should any company be able to come to the boards and try and list?
Well, I guess that's pure capitalism, but at the end of the day, we should hope for some infrastructure and some vetting process that creates some branding for the ASX. In other words, if it gets there, it already has a certain modicum of respect that's been earned. But really, I think this focus on IPOs, there's thousands of other companies on the market that are being voted on every day, that you can choose from a long history of their life cycles and their reports. I think people generally get caught up with IPOs too much.
A lot of attention given to them.
Yeah, I mean, it's sexy. It helps people sort of garner attention. But remember that there's a whole industry built around bringing these to market. So the broking, the investment banking industry that makes money out of it. And they're very good at what they do.
There you have it. IPOs aren't that nasty, but beware of the seller.